Hello everybody, hope that you're very well and welcome to tonight's Contenders live stream, which is going to be a great one indeed because well, today's a crazy day. If you're watching this back in like a few weeks time, you probably would have calmed down, but right now we've just seen a massive 15% move on Bitcoin. So yeah, it's been a very nice day indeed, not going to lie. So yeah, I'm really happy. I imagine everybody else in this chat is right now is very happy. Yeah, lovely day for Bitcoin. I want to go through link chart of the week because of Bitcoin's move. You've seen this just time and time again. When Bitcoin has these absolutely massive moves, okay, today is an absolutely massive move. Alts get absolutely destroyed. So my link setup was just an absolute wipeout. So what I've done is I'm gonna replace link chart of the week. So it's just pointless in doing an altcoin right now and change it to reviewing Bitcoin, how this has gone over the last few days, really. So yeah, chart of the week is going to be kind of just replaced. I'll show you really quickly what alts look like. Okay, so all the alts right now are just getting absolutely just wrecked. Okay, you can see over here on link. Yeah, this was originally looking for what I wanted to see was monthly hold, but that's just totally being lost now and back tested and looking for a move down again. So yeah, all the alts just kind of wrecked while Bitcoin has been doing so well today. So yeah, that's that to begin with. I'm going to change that over with reviewing some Bitcoin trades for you all, and yeah, then we'll get into what I want to cover today. And that is obviously going over trying to load up the right thing here, and that is going over session volume, naked pointer controls, and then how I like to preset bids. Because a question I get asked quite a lot is, Daniel, when do you preset a bids and when do you wait for confirmation? When's a level strong enough basically to like preset something? Versus when do you want to wait for the reaction off that level and get in after the fact? And obviously after the fact meaning that you're not going to be shorting the high, but you're going to be shorting a little bit lower, but then you get a little bit, slightly less profit but better probabilities that the trade's going to work. So there's always this sort of you can't just get everything good. You have to take a little bit of profit out to get better rewards in the long-term consistency. So this is a question I get asked a lot, and tonight's session is going to highlight to you some of my favorite setups, because tonight's setup is one of my top 3 that I like to trade in terms of like really good win rate. The win rates on these trades are really high, so that's obviously nice. And yeah, so that's all going to be intertwined really with what we're going over here with the primarily naked pointer controls, like how we trade naked pointer controls. Well, I guess what naked pointer controls are, if you don't know what that is. Yeah. So that's what you got to look forward to tonight. And now I want to start with Bitcoin. Okay. So yeah, I was writing this up, yeah, literally wrote this up before the stream, after Link, just started moving down this morning, or like last night really. So let me just take a drink and we will begin. I guess make sure everyone can hear me cool. Let me just check the comments. Yeah, hello everybody. It was an insane move. It absolutely was an insane move. And I'm going to lead this into what I expect to happen now. So I'm going to start off with a little bit of what's gone over the last few days, and then I'll end it like with this starting section with how I imagine this actually playing out over the few days to come. Okay, especially we've got a monthly close tomorrow as well. I'll cover my thought process on Bitcoin, because I feel otherwise people are going to be really distracted with Bitcoin, with what's going on right now with the massive move, rather than paying attention to what I want to cover. So I'll get Bitcoin out of the way before I begin, sort of thing. So what have we had over the last, this is primarily over the last, what was this? The live stream that I made, this is the Champions live stream I'm referring to. The Champions live stream, and if you haven't seen it, go watch it, from the 5th of April, obviously 2020. So this was over 3 weeks ago. Okay, so over 3 weeks ago, I made the live stream on Sunday the 5th of April. Yep, so go watch that live stream if you haven't. And my thought process in this live stream was that the market was predominantly bearish, and I had a gut feeling that price was going to push up higher. Okay, obviously a lot has happened since then that I'm not going to say my thought process was the same as from then as it now. That was over 3 weeks ago, but I had this feeling that we would push up higher, just a gut feeling that Bitcoin was going to basically take out a lot of the shorts, because of the fact the market was has been heavily leaning short. Okay, so go back and watch that live stream if you haven't. But basically what we have been seeing over the last, really it started getting bigger over the last 3 days. Okay, so really this section here is focused on the last 3 days. Okay. But what we could see, the market, the majority of the market has been leaning bearishly as we approach this sort of, this was really coming up to around that 7,000. Okay, so really from that 7,000 yearly open all the way up to this sort of 7,500 sort of region. But what we could see is the market has been leaning, bearish. And so what are signs, rather than just saying the majority are bullish, the majority are bearish? And I know this is one of the reasons why I removed the longs versus short percentage off of the trading updates, because you cannot just go off of this. Okay, so you have to look at bigger signs. So one way that you can look at market sentiment. Okay, so this is one of many ways, but one of a pretty good way of looking at market sentiment is looking at the futures market. Is the futures market in backwardation, or is it in contango? Okay, and these are topics that I'm going to expand further upon in live streams to come, or how you can really extract this data. But very, very simply, what you're looking at is backwardation. Okay, which is when spot price is trading higher than the futures price. Okay, and then the opposite of backwardation is obviously contango. Okay, and that will be where the futures price is trading higher than the spot price. And this is what you saw earlier in the year. Obviously, Bitcoin in spot price topped out at around 10,500, but we had the futures market trading over 11k. So that is an extreme contango between the futures and spot price. Okay. So what you can say is when you reach extreme levels, like we saw earlier this year, really, then it's just showing you the market is, predominantly bullish, expecting higher prices to come, and the majority generally get wrecked. And what we saw recently is the futures market trading below the spot price, e.g. people in the future are expecting to be able to buy Bitcoin at a lower price than it is right now. So you had slight backwardation there. On top of that, you also had the funding that was paying longs too. So why is funding really important? Okay, it all comes down to the market structure that you're in. Okay, so if you're in bearish market structure, then obviously you're going to be leaning towards being in a short, and if you have to pay a fee for being in the short, then it's not so bad, is it? Because you imagine that you're going to be making money because the structure's down. But if you're in bullish market structure, coming up to an obvious resistance, and on top of that the funding is actually paying longs, it is just makes so much sense to sit in a long position, doesn't it? Because firstly, you've got bullish market structure, e.g. you generally want to trade with the trend. So trading with the trend over the last week has been definitely trading to the long side. Okay, on top of that, you can see the majority of the market are expecting lower prices. On top of that, you can also see, you're getting paid. For instance, BitMEX is going to be paying you to sit in a long position, and if the market is going up, then that's absolutely what you have to envision as well is we've been grinding against this resistance. So we made like an ascending triangle last night. It's just there was a lot of factors that this was going to push up, to be honest. So what are some ways that we can look upon this? So here, this is kind of a sentiment. Okay, so what are we looking at when we look at backwardation, when we look at contango, when we look at the general funding, when we look at you can look at traders indexes, okay, to see where bigger traders or whatever, hedge funds, etc., where they're placing their money. For example, there's many ways that you can look at this, but very simply we can say from a pretty high from like an educated sort of perspective, then we can say that the majority of the market was looking at this bearishly. Okay, so that was more like the sentiment sort of thing. And then on top of the sentiment, then what else can you look at? Statistics, okay, and technical analysis. So statistics also favored a push up in price when we bounced off the value area high off of the swing failure pattern. What was this now? 3 days ago, the swing failure pattern. And then on top of this, we also had bullish divergences. Okay, so we can see statistics, and I've got some print screens for this coming up of like what's the likelihood to play out. Okay, so let's say that you have just randomly off the top of my head, let's say you have like a head and shoulders pattern, and you can have the statistics. How often do these play out? Okay, how much do they play out in bullish markets? How much do they play out in bearish markets, etc., etc. The statistics behind a pattern that you're trying to trade. Okay, so if you have the statistics in your favor, then I put it in order of importance. So this is the least important, this is the second sort of least, and the most important, obviously for me anyways, is technical analysis at the end of the day. And we also in this had the lovely ascending triangle last night with declining the volume in an uptrend, and then when you factor all these together, you have statistics that was going to say you were most likely to push up. You had the sentiment, trading against the majority, most likely to push up, and then you had the technical analysis also coming in saying that it was most likely to push up. Okay, so I'm just going to show some print screens from these sort of ideas. So this was obviously last week from a tweet I made, again just like highlighting, but at last week we obviously had the massive oil crash, a lot of factors basically that why the market was leaning heavily bearish at this point. And what do you want to do? You generally want to trade against the majority of the market. And that long was 6,800. We just hit 8,800, so it's crazy how quick that's gone, and that's a long position that I still hold. Moving on, what do you also have here? So the statistics side of thing, this is a print screen for anybody that hasn't seen it. Was a print screen from our chat a few days ago now, so 2 days ago. When was basically just telling the group that I've got the statistics of how often we're swing failuring. Okay, so swing failure pattern is a bearish pattern. So just remember, swing failure pattern is a bearish. Well, it can be bullish, obviously, in the context is, if it's a swing failure of the lows, then it's bullish. If it's a swing failure of the highs, then it's generally considered bearish. But what's been happening lately, okay, I caught onto this trend that we're seeing swing failure patterns that lead, okay, especially, so this is specifically under the uptrends I'm referring to, a swing failure pattern in an uptrend, okay, which is gets a swing failure, ends in a higher low, and massively if you bounce off the value area high. But as long as you never lose the value area low, okay, I was looking to see how quick, firstly how quick, and then secondly, whether we actually do end up moving up and break that high, or whether that is a massive high, whether that is the high and we actually break down further back into the next range lows, okay? So why do statistics like this help you? Okay, well, clearly, if you can have odds on your side, then you can strongly say the probabilities are on your side. Okay, if you can see statistical evidence of what's happened in the past, obviously technical analysis at the end of the day is patterns that are sort of repeating themselves. So if we can see a pattern that's repeating, we want to make use of that knowledge. We don't want to just ignore something, and we can make the use of it. So as I was saying to the group, we have the 62% chance, which is now higher because it played out again, to push up again higher when the value area high loads, okay? Holds, which obviously it did hold. And so when you have then the statistical advantage to say we're likely to push up there, then what are we coming together now? We're coming together with the sentiment we're expecting to push up. We're seeing statistics that push what we're expecting to push up. And then obviously a little bit here, we have a bit of technical analysis where I'm just, highlighting that I'm feeling more bullish than bearish. You have these several factors. The funding is bullish. So again, that kind of links to sentiment. You're seeing that a local uptrends. Again, if you're just simply trading with the trends, you're looking for longs, and support is holding. Okay. So kind of the rhetorical question of why short this, okay? So present to me an argument why you should be shorting this, and I'd obviously be happy to listen. But for me, there's no reason to short that to be honest. So, and then these are some technical pictures. So this started yesterday. We obviously had a bit of a symmetrical / ascending triangle in the end. Firstly, think back to what I've already taught you. So what have I taught you about these sort of, so this is the OBV, by the way, at the bottom. So what have I taught you in OBV? Price heading sideways in the range, but OBV is breaking up massively bullish. Okay, so OBV was going up really bullishly here while we were sideways. Okay, on top of that, you have an ascending triangle. And think of the context. I generally don't like triangles, but think of the context here, okay? All these factors that I've just listed to you are part of the context. So the context is obviously bullish. We're expecting a breakup. And on top of that, we have a bullish pattern. And why is this triangle so nice? Because it was on declining volume. So we were moving sideways, lower, 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 lower. So you can see the declining volume as price moves sideways in an uptrend. This is perfect consolidation, expecting a breakout. And on top of this was the bullish CVD divergences. Again, this is what I posted in the group yesterday, that we had bullish CVD divergences again, okay? And funnily enough, actually, these have had 100% strike rate. 100% strike rate. It's just insane. I'm referring to ones that I've posted in the group. But the ones, every time I've posted about this, it's worked. And it's insane how good they are. Yeah, literally just amazing. But obviously we had again those CVD bullish divergences yesterday, and that was off of this drop here. Okay, and obviously that traded out to give us closer to our symmetrical triangle. So yeah, basically you just had a lot of factors there coming together. You had the statistics, you had the technical analysis, and then you had the sentiment all coming together to give you kind of what you have now. So if we just load up this chart a second, it's coming together to what you had now. Oh, and on top of that, yes, of course, we also had the 1.618 Fibonacci time extension. That was taken from the high down to the low and extended, okay? And our 1.618 Fibonacci time extension was today. And as you all know, I was making you aware of the 29th of April for the day that we can expect a break. So how perfectly is it that we reached the 29th of April, the 1.618 Fibonacci time extension, and we reached in the end around 15% to the highs. That's absolutely crazy, isn't it? Like, just everything coming together that was leaning to get this break today. It's just been, yeah, I just love technical analysis. I mean, yeah, perfect, isn't it, really? I'll highlight to you that OBV again a second, just so everybody can actually see that, because this is what I've been like teaching. Well, look at the OBV go now. Obviously, it's a little bit hard to see this so easily now, but okay, it's kind of looking a little bit flatter, but basically what we can see is, sorry, what time frame was I on? Obviously you have to be on the right time frame, so 15 minutes, and yeah, I am under 15 minute here. So what we can see, if we expand this up a little bit, that is very strange that this is looking totally different for me right here. So pass on what's happened there. This is literally the print screen from last night, so I have no idea why this OBV looks so different for me right now. Literally no idea why that's happened. But yeah, basically our OBV was pushing up last night. I'm sorry, I was going to like confirm it here and show you on the stream, but you can clearly see that this is looking way different than what it was showing last night, so pass on that. Anyway, what we had last night in the time was that OBV moving up inside of that symmetrical triangle, and yeah, as you can see right now, if we load up the OBV once again, this is still currently, you know, well, clearly you can see it's just moved up very much so. So that's obviously following the trend, which is healthy. Okay, so yeah, that's what I wanted to show you here in terms of why we were looking at that breakout, why we were expecting this to break up, how it broke up, the day that it broke up on, and where we're running into now. So then to end this analysis a little bit of, am I expecting this to be the top right now? Oh, sorry, yes, that is the thing. I was on, yes, of course, sorry, I just saw the comments, and yes, that is absolutely true, that because I've been trading this on Binance. Okay, I've been trading this on Binance, and of course I would have been looking at it here. Yes, there you go. So that's what makes sense. This print screen, apologies there. That was poor of myself. Yeah, I was looking at this over on Binance, and this was because personally I've been trading. This was over the last few today I've traded more on BitMEX because I've been scalping. But for like swing positions, I've been using Binance because I'm just happy to go in and out of spot. It's just really easy to do that over on Binance, isn't it? So yeah, I've been trading more on Binance, and there's the OBV divergences, sorry, that I wanted to highlight here. So obviously the differences in exchange. So yeah, there's the ascending triangle. Okay, so if I just load this up one more time. So there was our ascending triangle that we had, and you can clearly see here that the OBV was just going up and up and up and up and up, while we were, you know, really up and up and up and up here, while price was going sideways. And as you know, back from the OBV stream, that was obviously a bullish sign. Funnily enough, yeah, if you look at BitMEX, it obviously wasn't doing the same, but yeah, obviously the OBV was just a confluence factor. It wasn't anything like that. You don't just see bullish OBV and think, right, this is going to go up. So okay, so it's again the confluence of factors. Hence why we never just trade off of one technical tool. Okay, so like this is period. Never ever just trade off of one thing. You always want to see all these factors coming together. Okay, and that way you have much higher probabilities. So yeah, ending this now with, do I think this is a top? So just for a little bit of a reference, okay, so I do have several accounts. I have swing trading accounts, I have scalp trading accounts, okay. So I'm in a position where, for a swing trading perspective, okay, I have I have taken the majority of my profits at this level, because for me we are at a massively key resistance, okay, and on top of that, okay, so on top of that, we have also now closed this CME futures gap, which is pretty pivotal in my opinion. So, yeah, in my opinion, if you're long, like 100, well, not financial advice. I guess I should probably load up this one a second. Please pause and read this. But yeah, for longs, you 100% have, like, well, let's just say it from my perspective, I've taken the majority of profits on my longs, and I've actually started to ladder in shorts, okay? So from here, I feel that the risk to reward is just really great on a short position. And again, this, if you look at the sentiment right now, you are just seeing longs absolutely piling in. We're just seeing a lot of FOMO. We're just seeing price overextended in the short term. We're seeing the gap, CME futures gap, closed. We are also just simply for the fact that we're coming into really high time frame resistances here. Okay, so when we come across to here, we're just coming into high time frame resistances. This key level, by the way, if you're interested where I got this key level from, it was the fixed range of, I was looking at it from here and getting this point of control. Now you can see it's slightly changed now as we've been moving around in price, but basically this was the fixed range that I was looking at for a of this section up here, looking at that point of control, and you can see that that's just, if you're interested, where I got that key level for me from. So this for me, yeah, is clearly a key level of resistance. We're coming into high time frame resistance in the fact that we've pushed up so quickly today. I am pretty comfortable, if I'm honest with you, laddering into a short position. So I have already got 3 of my laddered shorts filled, which I'm like will likely hold for a few days, probably into monthly close tomorrow. Obviously though, this is the thing. I want to just explain something. Sorry, this is going on a bit longer than what I thought. So I have a gut feeling that we head down lower from here. Okay, so my gut is kind of telling me that this is a really big bull trap, and we're going to head down heavily. Okay, so this is my gut feeling. Just intuition is kind of telling me that this is a big bull trap and we're going to head down lower. But at the end of the day, what are we gonna be trading off of? Gut feeling, or are we going to be trading the charts? Okay, and so if you look at this monthly, I mean, this monthly is really, really, really bullish. Okay, so if you just plainly look at the monthly with nothing on, it looks extremely bullish with the massive long lower wick that you got. Obviously you closed out March with that long lower wick of 78%, and then you've got April that continued on with a bullish engulfing. Well, obviously, as long as it closes above 8,500, which it might not, who knows? There's another day left, but if it closes above 8,500, then you have a bullish engulfing candle. So you're seeing a 78% lower wick, followed by a bullish engulfing candle on the monthly. It's extremely bullish in terms of, if you just look at those two candlesticks, then that does look extremely bullish. Okay. But then in the context, so why am I thinking this is more of a bull trap and we head down lower from here? Well, firstly, I just don't trust this move up so much. At the end of the day as well, you can clearly see we have seen these rises in price. Obviously, comparisons between this and this, at the end of the day, I don't know. I really do get the feel that we're just going to head down. But I guess if we push up again, and what we could be looking back up to this monthly, which is sat around, oh sorry, we're all the way up here, sorry. But nevertheless, this monthly, okay, is kind of the line in the sand for me, because then we have the confluence once again at the top of this channel on this monthly, and wouldn't you it would kind of make sense, in my opinion anyway, to top out around here. So yeah, I'm personally happy to ladder shorts into this, because I feel even in the short term we're due a pullback. Again, I'm not trying to time the high. I'm not trying to time the exact high by saying this is going to be the exact high. I am laddering into it from here, and I've literally only started doing this over the past 1 hour. So it's not like today I've been trying to short and short and short and short like the exact high in terms of a swing trade. This for me now is going to be more of a swing trade, but I've laddered into the entry rather than like this is the exact high and I'm going to put all in on this position sort of thing. So I did try that once. When we hit 8,700, but then I closed 50% and I put it into a ladder. So yeah, I personally feel that we are going to top out around here. So we'll have to see if that comes true or not. But yeah, because of the, well, I guess from a personal perspective, and I guess it's going to help you somewhat because of the fact, my portfolio has been massively up today. I do feel also comfortable laddering into a short from here because it's just a crazy kind of move. So yeah, that's kind of my perspective on Bitcoin. Okay, so to end my perspective on Bitcoin, technically from the charts, okay, I'll end actually by showing you this quote that I gave you all today. So it kind of does relate to this. So when I was saying, so when people were like asking, I'll be shorting these, I was like, don't try and short this, and so you really know how to manage positions in scalp trick trades. Otherwise, I would say you're just going to throw away money. E.g. today, if you don't know what you're doing really, and you've been trying to short this, you 100% have lost money because clearly we've just gone up massively. So as I said here, the majority of you, 99% of you, are better off just longing, while this trend is so strong. And from this post, which was at 5:30, we've moved up another 4%. So yeah, that was clearly pretty good post, because yeah, price increased another 4% from there. But yeah, nevertheless, For like, if you want like a safe, because we have to agree right now this is a pretty dangerous long, because the momentum is clearly with the bull. Sorry, a pretty dangerous short, because momentum is with the bulls. Okay, so we have to acknowledge right now shorting is trading against the trend, and generally speaking you are better to trade with the trend. Okay, so just remember that shorting right now is extremely risky if you don't know how to calculate your risk. Okay, my risk here is very, very, very calculated. So I am personally very comfortable shorting here, and if we move up past that monthly, I'll just, I'll take a loss, obviously. But for me, it's worth it here. Not saying that everybody should follow me on that one. I clearly acknowledge this is a risky short because I'm trading against the trend on this one. Where could you have a bit more of a safer short, let's say? So really, I would say, how likely is it that this is the high? I do feel that maybe Bitcoin will punish you one more time and at least take this high. I don't think it's likely personally that we just go straight back down from here. Hence why I'm like laddering into this, because I feel that there's definitely space for another push up. Although we have closed that CME gap. Okay, so though that let's just load out that one more time. So that CME gap is closed. Okay, so this CME gap, where did I post it? So yeah, obviously posting this one, that CME gap had closed on the daily time frame. That is, so yeah, for me, yeah, I am favoring the short here, but yeah, where would I add more size? Okay, so let's think about this, a position sizing as well. Where would you, let's say you enter into a laddered short, and you want to either wait for your ladders to fill or you want to compound it. Where could you look to compound? Okay, so I think we have a few key places where one could look to compound a trade in terms of the shorts. Well, I think you have a few key supports here. Well, clearly we have not closed below this low yet. So the first low made here, we have not closed below that yet. We've held it, but I don't know, it looks pretty weak. But nevertheless, we're holding that support. And then for me, you got this key area of support right here, which would have gained this little block before you increase in price. So what I would say, really, I mean, if you're expecting this to go heavily down in price, does it really matter whether you short 8,600 or you short a loss of this block and you're shorting like 8,250 sort of thing? I mean, it really shouldn't make a massive difference to you, because your probabilities, okay, so we have to, if you think about it in terms of probabilities, what's the likelihood this is the high? This is just off the top of my head right now. We can say something like, well, it's only 30% likely this is the top. So probabilities say it's more likely that we head up from here. Okay, that's just a number taken off the top of my head. I'm not saying it's 30%, but just for the sake of the example, we're saying 30% we head down from here, and 70% probabilities that we head up from here. Why? Because no support has already been lost. Okay, but let's say we do this and we put in our lower high, and then we head back into this. Okay, so something like this, we retest this once more and we reject, we come back into this range sort of thing, we break that range and lose the range. I mean, once you've seen a breakdown like this, we can say the probabilities of this being the top have suddenly increased to 55%. And then if we go back into an old consolidation and break the lows of the consolidation, well, here we can say then we suddenly have like 70% probabilities in your favor. So yes, you are essentially getting a worse entry, obviously, but then the probabilities and the risk that you can put on, so you can be putting on bigger position sizes here than you would be putting on a bigger position size here, because here you have much less risk within your trade, or your risk is much more calculated in terms of overall stop loss. Okay, so my stop loss is a bit in the air, so here you would have 100% of the really defined stop loss. Okay, so that's like one way that I would say approach this. There's no, I really truly believe, again, like 99% of people don't need to time this high. There's just no need really to try and time this high. I'm personally doing it, but I just don't feel there's so much need. While the trend is so bullish, at least you could wait for some structure to be broken. So yeah, that's kind of how I'm approaching this. And then I'll end with some bigger levels. If we do break this monthly, which let's just give it a bit of space, okay, everybody. So let's just look at this in terms of, if we look at this as a fixed range, and we can see here we're seeing this high come in at, so this point of control coming in at around 9,800. Okay, so if let's say we got a monthly, then 9,800. If we break 9,800, I mean, you got to be looking at this. Yeah, pretty crazy. If we get above there, you're going to be looking back up to the highs 10,500. If you break 10,500, it's going to look extremely bullish. I personally would be surprised if we break 10,500, but I'm not going to fight it if we actually break above this again. So, I guess I would just literally stay in a long until I see some form of rejection, because if we break 10,500, yeah, I guess off the top of my head, if we break past this high, then I'd be looking for around 17k. So 17k is a possibility, which is crazy to think about when we were back at 3k just a month ago. So yeah, that's kind of my perspective. That's a really big level. Then you've got the point of control. If you get above this point of control, look for the highs. If you break out of that, then you've broken this downtrend, and yeah, why not 17k sort of thing. So yeah, and then if we sort of break down from here, well, the key levels remain for me daily, weekly. At the end of the day, you could even pull all the way back to here, okay, which is your yearly open, and then break up once more. So this yearly open remains a line in the sand. If we obviously do something like this, it's not going to go straight down, but we do something like this, and then we bounce off of that, but we lose our yearly open, then I think, yeah, you're going to be looking back down to around these 5k regions. But yeah, yearly open is a really big level for me. It's not overly bearish, because at the moment, because of how bullish this rise is, okay, we can come and back test this and break up again. So yeah, it's a really big level when you just look at generally how the market's gone here as well. Really, when we did come back above this block, then you can say, yeah, it was pretty bullish, wasn't it? So especially with that monthly close, you obviously had that monthly close back below back above the highs of the lows of this wicks. So you obviously closed that monthly above the low, so you were getting acceptance then, and then that acceptance obviously continued with massive strength. So this is 1, 2, 3, 4, 5, 6, 7 green weeks in a row. Try and see how many green weeks of 7 you've had in a row. I think there's 1, if I remember correctly. And it's just really, really, really rare. I very much personally doubt we get an 8 green weeks in a row. That's, you just again have to think back to probabilities, which it's extremely, extremely, extremely unlikely that we get another green week. So yeah, that's just that went on a lot longer than what I imagined. I wasn't actually envisioning to go on so long talking about Bitcoin there. That's already wasted half an hour. So yeah, personally, yeah, I feel the probabilities for me here are good for a short, hence why I'm going to take a short here. If I get stopped out of the short, then it's really, for me, not the end of the world. And yeah, if we get back above that high of 10,500, obviously I want to be looking at stats in the time, okay? So again, when I'm looking at statistics, what can I be looking for? I can be looking at things, these sort of things. Are we getting patterns? Are we getting CVD divergences? So I'm not just going to say we get above 10.5k, I'm going to long to 17k. I don't trade like that. But, that would be a big high term time frame target, let's say. So yeah, that is Bitcoin covered, and I hope I've covered that in enough detail of, firstly, how we could have expected this to break out. There was a lot of reasonings for this breakout to happen, and then how did we know the day that it was going to break out? Well, it was likely going to break out today because of the fact that we had the 1.618 Fibonacci extension, on top of the fact monthly closes tomorrow. So monthly close being tomorrow also laid high probabilities into this break. So in terms of time when it was going to break, it was very likely we were getting it. And then in terms of the direction that it was going to break, again, we had strong probabilities that it was going to break upwards, as well as, just things pointing, technical analysis pointing. So everything was pointing up. We got to break up. Brilliant. We've made some money on the breakup now, but there's no need to get greedy and just hold on to longs forever, because just think to yourself, how many times have you seen a long position turn into losses because you got greedy, because you didn't take profit? Okay, so I really think at the end of the day, this is a good take profit. If you don't want to short yet, you don't need to short right now. You could wait for obviously just wait for a bit more confirmation on the short, or at least that's where you can add sort of size. For me personally, I have taken profits, the majority of profits on my longs, and I'm looking, or I've already started to take short. So that's the way I'm approaching this right now. I feel I've got good probabilities. I feel this is a very calculated trade. So that's trading, and that's Bitcoin. So moving on to what I want to cover today. Apologies if I bored you all with that, but yeah, I kind of wanted to cover it. So yeah, moving on to Bitcoin. I've stuck in my head. Moving on to session volume. Okay, so what I want to cover tonight primarily is session volume and naked point of controls. Okay, so we're going to start with session volume, then I'll move on to explain point of controls, then I'll explain how you look for these and how I personally anyway trade off of them, because I'm sure there's many different ways people use them, but I'll go over the way that I trade off from them, which is very, really nice. So session volume is a good way of seeing pivotal value area lows, value area highs, and point of controls from each trading session. Okay, so you have to remember that cryptocurrency, where the majority of my viewers are here, are 24-hour period. So we're just looking at daily periods when we look at crypto being a 24-hour market. Okay, so each of these are used as support and resistance and are very important levels to be aware of for day traders. I will always check. Okay, so this is one of the things that you can write down. Okay, so make a note that one of the things you always want to be checking, okay, is where previous days value area low, point of control, value area high was. Okay, so before you even start trading, make sure you write down. I like to do it on like a bit of paper. Write down all the important levels that you need to be aware of before you even start trading, and these are 3 that I will always look at before. Okay, because for me they're critically important, especially this is again a bit of more of a day trader's perspective. I guess it's swing traders, you should still do it, I suppose, but yeah, I will always check where each of these levels were for the past day before I start trading. Are pretty important. Other levels would be previous week's value area low, previous week's point of control, previous week's value area high. They're also important levels, but primarily for day traders you're looking at previous day, and I'll show you how to get this in a second. But yeah, the main focus for swing traders are the naked point of controls. Again, this can be used for scalp traders, but yeah, naked point of controls. And what is this? This is where a point of control from a previous session has not been tapped. It generally will give a bounce when approached for the first time, but does not. But as always, you need to like see another form of confluence. So don't just see a naked point of control and think, right, I'm going to place a short there, it's going to reject, it's a naked point of control. No. So you have to see another form of confluence with not even, no second thoughts about it. You have to see something else lining up there, okay? Obviously, the more confluence that you have at this level, the stronger it is. But never just, as with everything in technical analysis, never just see one thing, take the trade, because the probabilities of that trading are extremely low and you're just going to lose money. So naked point of controls, this is, I'll show you actually on TradingView, because of the way that you can see this on several different platforms. Okay, I'll explain how I look at it on all of those platforms. But if we just, I don't want to load up that, we'll just load up a blank chart a second. So if we just load up, we'll just load up this. I think it's blank at the moment. So yes, we got a blank chart here. So right, if we just go on to the daily, what we're going to be going through here is the session volume. Okay, so this is our session volumes. We can double click on this. These are the settings for everybody that wants to copy the settings. Okay, again, you're going to have to go back and pause this, but those are the settings that you can pause this video and get. And so yeah, that's firstly just the settings that we have here. So then how are you using the session volume? So I'm just going to take a drink. Okay, so session volumes, previous day point of controls, previous day value area highs, the websites that I use for this, and the information that you can get from it. So firstly, this is the daily view of, so we're on the daily time frame. And I personally would say that naked point of controls are the strongest of daily and weekly time frames, okay? So I do trade this intraday. But when you have a big like naked daily point of control, like you can see here, so this one sits 6,295. That for me is a really big support. Okay, I'm not sure if you can remember, but when price was down around here, one of the levels that I was banging on about was 6,200, that if approached, it was a good support. And this was one of the reasons that I was, mentioning it, because it was a naked point of control back then. Okay, and obviously when you're down here, the probabilities of reaching it are pretty high. Obviously now they're not so high, but that is it still is a naked point of control on this chart. It's really, really important. So what you can see is just be aware. So I think that I got a yes, I do have a bit more slides. I think I actually had meant to do this and then this. So these are some more slides that sorry, I must have accidentally moved those around. So let me just explain this. Sorry. So a question I get asked a lot, okay, is actually this way around. So why does this work? So naked point of controls. So this first is then a bit of what they are. So naked point of controls, as you can see on this chart, this is an extending. So in the settings that I had for this, okay, so in the settings of this indicator, if it actually lets me load up the settings here, okay, make sure you just have the extended point of control to the right, and that will extend it. Okay, so naked point of controls are placed on the chart where the, clearly you all know what point of controls are now, but it's the area where the most volume was transacted. So when a price breaks away from that price, and that's it's a bit of a joke, let's say 95% of the people got the direction that it was going to break wrong. Okay, you have to think the majority of the market generally get it wrong. So we're going to say when you have a naked point of control, a lot of transactions being traded there. 95% of the people have got the breakout direction wrong. Everyone was expecting it to go down. It's broke up. Okay, so when you revisit that price where a lot of people had got it wrong, what do people like to do when they're massively underwater? They like to get out, break even, don't they? So that a naked point of control is showing you that that's where the point of control was. That's where there's likely underwater traders. And when price revisit that, emphasis on the first time, you're expecting a bounce. And why is this? This is why the first touch of a naked point of control is such strong support. You have a lot of people getting out break even. So you've got that, let's say, 95% of the traders that got the direction wrong are now loving, would love the opportunity to get out break even. So you have all those people that are just, that obviously would hold it as support as they close their position there. And then you have like traders such as myself that like to trade off naked point of controls. So you're pairing this together. You're pairing, traders that are going to be buying it along with the traders that are getting out break even, and then you have on that day, but like naked point of control, like double the strength, quote unquote double the strength, because you got newer traders bidding at the level, and you also then have a lot of traders wanting to get out break even at the level. Coming together, one expects this to be a strong support level because you've kind of got almost double the interaction at that level when reapproached. And again, a big emphasis is on the first time it's hit. Okay, so first time it's hit is really good, but you don't want to just keep, I wouldn't trade it the second time, for example. So I will only ever preset bids. And these are levels where I will preset bids, and this is one of my strongest when I get confluence is a level that I'm happy to have bids preset waiting, because I feel at least on this first touch the probabilities are very strong that I'm going to get a reaction that I want to see off this chart. Okay, so I only have a preset bids there if there is at least one other confluence. So I'm not just going to see a naked point of control and preset bids there. It's not enough. But one of my favorite setups is a naked point of control in a CC. Okay, so within it, or on a weekly, monthly level. Okay, so you don't get these setups all the time, but you'll be surprised, especially on an intraday basis, how often this happens. Okay, so I would say once every few days, okay, at least once a week, you will see a naked point of control line up with a CC. So let's just say you take one trade a week, okay, over the course of a year. I am fairly certain that, I guess I can just say myself personally, will be making money off of one trade that I've got lined up, ready, waiting for each time it's approached. Probabilities from my statistics and my journaling say that I could take this trade over the course of a year and I would just make money trading off of this one thing, sort of thing. So for me, it's a really strong level. Okay, I love to preset bids at these levels. I feel that they're good, especially intraday trading, at least the first reaction. Okay. So yeah, a question I get asked a lot is, do I leave bids set versus waiting for confirmation the level is held and get into position slightly later? First of all, I believe waiting for a reaction is going to be beneficial to most of you over the long term. And this is now referring to, am I presetting bids? Am I waiting for the reactions? Okay, so test it out over your next 10 trades. Okay, so place an alert where you are going to place a buy/sell order and wait for the reaction and then get in after that. So what I'm saying is stop presetting bids. Okay, so just periods for the next 10 trades. Give this a go. Place an alert where you were going to preset your bids. Okay, and then once you've seen the rejection that you were expecting, let's say, get in after that and then adjust your stop loss to where is necessary. Okay, because either that or you just don't get into a position because where you're expecting a rejection, price just goes straight through. Either you never took the trade and you can now make a new assumption. So give this a go over your next 10 trades. Place an alert where you're going to place the preset sell order, wait for the reaction, and then get in more informed, high probability kind of trade. And so I generally like to wait for the reaction and get in straight after. Okay, and this is generally speaking on, I would say, like 90% of my trades. I don't have bids preset. I generally am waiting for the reaction and then getting in straight away. Again, advantage for me is, I'm at my computer all the time. I have no life. I can do this. But if you have a full-time job, for example, or you have other commitments with your children, etc., then obviously you're not going to be able to be so adaptive, and you might have to, lean towards presetting. But nevertheless, circumstances. But yeah, there are times where I will preset orders waiting at a level, and one of my favorite setups to do that on is the naked point of control with confluence at another level. So now I've got a lot of examples here for you. So I'm just going to take another drink really quick. Sorry. Yes. this is just some beautiful examples. We'll go over the chart live now in a second, but these are just some beautiful examples. This was just literally the last few days of price action on Bitcoin. So this is not something that I've gone months back in advance and handpicked for these examples. This is literally the last few days on the Bitcoin chart here. You know, just this is what you can expect every day. It's just brilliant. So literally, this was how we had been trading in this range when we were around 7,600, as you can see here. Okay, so point number one, this is our session volume. I'm down on the 15-minute time frame. Okay, so let me explain this. If we go down to the 15-minute time frame, this 15-minute time frame is still going to encapsulate as if you're on the daily session volume. Any questions, let me know, please. But the session volume of the day is obviously just taking our 24-hour periods. When we're down on the 15-minute, it's not changing any of the settings. We're just getting a zoomed in view of that day. Okay, excuse me. So we can see that today value area high is currently sat at 8,540, and you know, on this pullback here you reach 8,564. So one could argue a slight front run because this trend is bullish. If it's bullish, people do front run orders. So that we can say is support number one. We have support number two, which is a bigger support, sat at 8,312, and this is why it's perfectly acceptable not to short here and wait for, in my opinion, you got two options. Wait for price to get acceptance back into the value area high, because if you get acceptance into the value area high, generally speaking, you would expect this to trade that down to the point of the control, ultimately that back down to the value area. Wow, value area low is literally at daily open. That's insane. But wow, that is insane. Yeah, you don't often see that, but nevertheless, yeah, that's one way you could use a bit of confirmation here. You could say this bouncing off value area high is actually bullish. Okay, so again, that's a bullish sign. If you bounce off value area high in an uptrend, clearly that's really, really bullish. So currently, it's hard to deny that the strength is still with the bulls while these supports hold. Absolutely, I don't deny that. So yeah, basically though, this 15-minute time frame where I was going there, this 15-minute is taken from the daily. It's just a zoomed in view. So as you can see here, how the price was moving along. So here, the previous day, so this is our previous day point of control, previous day value area high, previous day value area low. We move into the next day. Look how price reacts. I just find it fascinatingly amazing, and especially when you make money off this, it's just brilliant. So you can see here, price, where's the first reaction from here? Sorry if you can't see it very well, but price first reaction is off previous day value area high. We reject off previous day value area high. We come back down, we find support on previous day point of control. From previous day point of control, we bounce up again into previous day value area high, but this time closing above previous day value area high. From previous day value area high, we hold that and we move up again. Again, this is kind of like, I haven't got onto this. Okay, so I haven't actually covered this in my videos yet, but this is kind of like a double distribution day. Okay, so you do need TPO charts for this officially, but nevertheless you can kind of see double distribution here, where we have one area of distribution, we have maybe a few single prints here on the chart, and then you get another distribution occurring here. So this is like a double distribution day, and nevertheless we get essentially one range break up and then you form a new range here, but we get our second distribution, which gives us our point of control. Okay, and that's our daily point of control of the, so again, you can look at statistics such as developing day, so you can get a developing day point of control, a developing day value area high, and a developing day value area low. So you know that the developing day is what we're looking at here, because this day is still going on, isn't it? So nevertheless, we have this daily point of control or developing day point of control at the time where you move up to. Okay, we get a rejection here, really funnily, but you get a rejection here, and where do you find support? You get a big wick through, but support comes in at previous day's point of control. So this is again really great, isn't it? You're now finding support at previous day's point of control. From previous day's point of control, you actually bounce off a previous day's point of control. Where do you bounce up to? You bounce up to your point of control of the current day, and then you reject off that point of control of the current day, and then you bounce off of once again previous day's value area high. So our previous day value area high, we can see here it has been interacted with, bounce interacted with, current point of control, previous day's point of control, bouncing up to developing day's point of control, bouncing off of the previous day's value area high, bouncing off of this. This is obviously, you know, leaning bullish. You bounce up, and you obviously get your movement here, and you get a bit of a crazy kind of wicks. And where do you find support? So then support here, so support is being found at previous day's point of control. So previous day's point of control, price auctions above it, and then it's finding support support, support, support off of previous day's point of control. So you can just see here, literally from the charts, how these levels are massively important. And I've kind of highlighted it here. Just look how you bounce from the value area high, point of control, value area high, point of control, value area high, point of control, value area high, point of control to point of control to previous days point of control to point of control to previous days value area high, up, move up, back off previous days point of control, back off value area high, back off previous day's point of control, back up to value area high, back up to, then reclaiming developing day's point of control. And from here, we all know what happened. We shot up to now currently like 8,800. Amazing, isn't it? So if we just now review that live on the chart, so you can see what that looked like as we were going through it. So this would have been taken when I was getting these print screens. So again, I'm not cherry picking this. This is not me cherry picking. I'm just going over literally what's happening on the charts now, sort of thing. So you can see how this was taken from here, where we were getting our bounces. These are previous days point of, well, obviously at the time. So if we're looking at this now, then we'd be saying our previous day point of control is all the way at 7,700. So it's pretty unlikely that we get back down to here. All I would say is there is a way that you can trade this in terms of probabilities as well. Okay, so a trade that I do like to take, and it's easier if we accept, let's just look at this because of it's pretty hard. The scaling is really bad because of the fact we had this big move up. Okay, but here is like another bit of a rule that you can use, which is really good. That if price auctions above the previous day's value area high, and say you bounce and you form a little bit of a distribution pattern above this, and you break back in to previous day's value area high. Okay, so this is value area high of the previous day, let's say. Okay, and originally you hold it, but let's say you hold this and then you form a distribution pattern above this, and you break back down into previous day's value area high, and you form some sort of rejection off of this, and you auction back down into previous day's value area high. You have 80% probabilities, which is a really, really good trade. You have 80% probability of auctioning all the way back down to previous day's value area low. Okay, so another tip, if you're, again, this is for day traders, but if you form, if you're next day, okay, you get a start of a bullish day and you get above previous day's value area high, but then you auction back into the previous day's value area high, then you are expecting a 80% chance that you auction all the way back down to previous day's value area low. Okay, and then you basically are looking for this to still maintain range. Why is this? Because if price comes back above value area high of the previous day, but then auctions back into it, this is showing us that price has not been accepted above this high. People are not interested in buying this. It's come back into the range, so you're more likely expecting this range to continue, sort of thing. That range that you were previously in, why you just expect that to then continue. Okay, until you get a proper break that gets follow through, and then clearly this range is no use to you anymore, and you expect to bring a breakout. So yeah, that is another bit of a tip that I will give you of how you can look to trade these with that 8% probability. It's really nice. Again, context is important. But that's still the way that you generally would look to trade this. So there you go. So that's what it looks like on TradingView. This is Sierra charts. So Sierra charts, you're going to have a bit of a different viewpoint here, where you can see here, on Sierra charts, again, you're going to have custom settings and things, but this is like our extension of the previous. Here we can see the TPO charts on top of the volume profiles, but nevertheless, like here it lines up exactly. So we have a naked point of control coming in at this chart, 7,570. This is on the daily chart here. And above us, we have a daily naked point of control coming in at 9,120. So 9,120 resistance. Okay, and we have that support on the daily chart coming in at 7,570. Okay, so those are two support and resistances. You can also look at this on the weekly chart, so we can see our weekly naked point of control up here coming in at, again, exactly the same, 9,120. E.g., 9,120 for me is a big resistance point on this chart. Okay, and we do have this weekly naked point of control all the way down at 5,280. So that's a very, very low, but for again, that's going to be big support if we hit 5,280, and that weekly is coming in at 9,120. So 9,120 to be aware of, and on the weekly profile you're going to be aware of 5,280. Okay, so that's how you look at it on Sierra charts, okay, and how you look at it on TradingView is here. And another website which I'm going to be going through for you all because I really do like this website is Exo Charts. And on Exo Charts you can look at this, is pretty easy, okay, because what you can do here is you can actually ask it to mark out these for you. So instead of doing it all manually, you can actually just tick, okay, I want to see previous, developing days point of control, the value area high, the low, previous day, I want to see those levels as well. And it's literally just going to put a mark on your chart where they are, okay. So it's going to make it very, very simple for you, isn't it? Because this website is just like very beginner friendly, so to speak, where it just does everything for you. So if you were looking at this, okay, again, these are like session views. So I do like Exo charts for scalping. I think it's very good for scalpers, but in terms of like being able to view this information really, really quick, you can see here these are naked point of controls extended on like a 15-minute chart, for example. They're not as strong levels, but nevertheless, I like the fact that on this website, you can just literally have this. If I wanted to see the developing day details and previous days details, and I can just have this ticked on my chart, and when I scroll down to here, I'm going to see exactly where those values are. Going to see exactly where those values are just by looking at it. It's going to list it for me, so it makes it very simple for yourself. Okay, so again, this is the naked point of controls, looking at it on the Exo charts. This is Sierra charts, and this is TradingView. Yeah, I know people don't like to have so many websites. Personally, I feel that the best is Sierra charts. Why? Sierra charts is an all-in-one platform. It's very technically minded. It's not for everybody because of the fact you have to have really good knowledge with the software. It's really not user friendly. It's anything but user friendly, Sierra charts. So Sierra charts is my personal favorite, but it's really advanced. So Exo charts is like a really good solution. It's not all in one. You cannot trade off of it, but it's a very good website and I believe good value. And then obviously TradingView is your bread and butter. This is where you do the majority of your work. So, Sierra charts and Exo charts are optional extras, but personally I like them. So let's continue. So yeah, this is an intraday setup example of where we were looking at a previous days. So this would have been a naked point of control. And if you, I can't zoom in here, but basically this point of control here was touched for the first time here, which touched it, if I remember, it touched it like $3 above. It got like $3 above that naked point of control, and we touched it and we rejected, and we got like a $200 rejection. So again, like if you have bids preset at this naked point of control, you got a $200 reaction off of it. But obviously, as we all know, the second time we touched this, we shot straight through up to nearly 9k. So the first touch of it, very good, because you got into a you got a profitable position. But a second time that you touched it, we blasted through. Yeah, you blasted through that level. So this is now an example of like an intraday setup of where I would love to preset shorts. Okay, so what we can see here is from the high down to the low, we have the CC in a previous day's point of control. So this is an extended previous day's point of control that I've extended. Previous day's point of control coming into the CC, and this is also the naked point of control from the previous day. So here you have, obviously, I guess previous day, well, just naked point of control of the previous day going into the CC. This is a good probability setup for an intraday scalper. As you can see, what happens here is this. Price works its way up over the course of the day. We hit that naked point of control inside of the CC, we come back down, and in the end, what was you bounce off that developing days point of control. Obviously it would have been the point of control from this section, and you can see how that is in the edge support, and you do break up from here higher. Okay, so this does obviously auction higher in the end, but the first touch gave you a profitable trade before it obviously trades up higher again. So this is a setup that I do really like to take the point of control inside of this. I can go over some like examples. We can try and find some examples live of what we could be looking for. Let's take a random chart here. Kind of sucks a little bit because of the fact all of this is going to be very overextended now, because this is all dropped down very heavily. I need to take a drink. I'm really sorry. Sorry, my throat starts to hurt when I speak for so long. So let's say here, or let me just go through them really quickly and see where I can see a setup. It's a little bit slow on TradingView, you see. Wouldn't be looking for one there. Let's just load this up. I'm just going to try and find a nice live example for you, really. Okay, so this might be one. Wow. Okay, so what you can see here is this was a naked point of control from this day's session. As you can see, it is expanded across. It wasn't inside the CC, but nevertheless you can see the reaction that you're getting from this. Prices dropped down onto that naked point of control on a swing failure pattern on top of the 616, and that in the end has got here a reaction of 2.5%. Would have I had bids preset there on an altcoin? No. The truth is I wouldn't have actually preset a bid there, but nevertheless you can see the reaction off of those naked point of controls. That's a nice one. Let's just go through and see what else we got here. Okay, so here's some examples where it would have worked and where it wouldn't have worked. You can see here clearly you come down to this naked point of control and it offered no support at all. Okay, so you can see nothing there at all here. It's just gone straight through it. But here, price has almost to the dollar bounced off this naked point of control. Okay, and again you're seeing what, about 2.5%. This is on Binance Coin. So here, so this is like this is the thing here. There's, you've just gone straight through it. Here you've bounced off it to the almost exact dollar. So what you have to think is why have we bounced here and why did we not bounce here? Okay, so think to yourself, there's always going to be another reason. Okay, so you're going to have to think to yourself, what's the confluence of why we bounced here? I generally like to just pull fibs in the first instance, and we're here we can see, well, there's not really so much Fibonacci work going on there. Okay, so maybe we had a bigger structure coming on from back here. I don't know because I've not done the TA on this. No, so that one actually doesn't line up either. What we can see, let's pull it from here maybe because this would have been this wave. Again, there's nothing really telling us, screaming out to us. I don't know. I'm sure we could try and find out exactly why it bounced, but we can just say for the time being that we had that naked point of control. It's clearly held you up there, but in terms of confluence, again, I wouldn't have just preset a bid here unless there was something that was really obvious to me. Maybe we had like a confluence and we take all of this. Again, yeah, for me, there's nothing obvious that there was another factor. So it's a bit of a gamble, I would have thought, buying that. But clearly it got a 2.5% bounce off that level. Let's just go through and see again. So I would say like here in terms of engine coin, where would I be comfortable presetting a bid? Yeah, I would be comfortable presetting a bid on this point of control. Why? Because I can see here, oh, my throat is really hurting right now. We have the liquidity below this. So here I see a big liquidity possibly. Anyway, we need to look into the chart more if we're honest, but we have a big liquidity possibility below this wick. Okay, we see that on the weekly and we see that on a naked point of control here. So we can see that this is like a big confluence factor to expect an increase in price. Okay, so that's obviously coming in at the weekly at this naked point of control. And yeah, on that big liquidity level. So that's this one. Why are these ones not, in my opinion, not so probable? Because, well, just off the top of my head anyway, I can't see any confluence. Okay, whereas just straight away I can see this weekly with a liquidity grab on this low. So again, you just want to see like factors lining up together. Okay, this one's not going to offer any good trades. We could go through all the charts. If anybody has any other questions, then just let me know. Please write any questions, and if you don't understand what I'm doing here, then you're gonna have to say. But it's not too complex. I personally don't really like the way that TradingView has it here, so I like the view here. So I must admit that I do like the view on I don't really look at it on what am I referring? I don't really like the look of it on TradingView so much, but yes, that's what I wanted to say. So here, I like to go into the daily, okay, and just have this. This is just going to really simply extend them for me. In my opinion, it looks a lot cleaner, doesn't it? So when you look at this and you look at TradingView, it just, for me anyway, it's just so much cleaner on this website. So yeah, again, like this is where just really simply I could say 9115 naked point of control. But again, is there any confluence at this level? Not so much. There's more confluence I don't know. We have to go into more detail here, but I can't see any conflicts off the top of my head there. But I still feel this is a really, really big resistance because of the fact that we're coming into this 9K in the context of like how we've increased so quickly here. But yeah, there's nothing actually exactly on that 9150 level, so you got to be slightly cautious there. Yeah, so if does anybody have any questions? I feel like I've done quite a lot in this stream. I'm not sure whether I covered it like too quickly or not. You'll have to let me know. I guess I'll be able to tell by the amount of questions. But yeah, I mean, the theory behind this is not so hard, okay? So what are we looking at here? So really, intraday perspectives is when this is used the most for like the majority of trades, where you're looking at that previous day value area high, previous day value area low, previous day point of control using, and you can just see how it like price interacts with it as support and resistance. So they're really big levels. So that's takeaway point number one when you can use this in an intraday perspective. Takeaway point number two, if you trade above, let's say a value area, and you trade back into the value area high and you have acceptance into value area highs, you got an 80% probability of trading it back down to that value area low. So that's point number two. Point number three, that I really like to preset bids on naked point of controls. Okay, so it has to be a naked point of control. It doesn't have to be for the previous day, but just naked point of control period. When there's another confluence level, I love to preset bids on these levels because I feel the first touch of this level has a very, very strong probability of bouncing. So these are some of my favorite setups to, you know, have the confidence to preset a bid there. Yeah, those are the real takeaway points. And then I hope that you've understood how I use these tools. You know, I feel it's a little bit confusing because not everyone knows how to use these websites yet, and obviously I've got a live stream coming up to explain how to use Exo charts, for example, but it might be a slightly confusing because you don't have access to this website yet, or maybe, but yeah, that's sort of coming up. And yeah, Bitcoin is still finding strength here. So Bitcoin is still finding strength. So yeah, this is remarkable. It's you know, moving up again here. So crazy. Yeah, so let me go through some questions. I'm sure there's going to be a lot. Can we see some example of CVD divergences? Yeah, literally just go on to yesterday. So again, I use this on different websites. I'll show this really quick. I don't really like to go off topic on the questions, but here is a really quick example for you. Okay, where we could see here, so we were looking at it back here. Okay, so price was clearly making higher low, higher low, higher low, higher low, higher low, and we, you know, fell off the cliff here, made much lower lows. Okay, so if we just like this website is sometimes a little bit, if we just hide the heat map. Okay, so just to highlight this for you very simply, you can see price making higher lows. Okay, and here you made a big lower low. Okay, so this is a bullish CVD divergence, and obviously this is where I was recognizing it, and that's then how it played out. So that was a really good bullish CVD divergence, and I'm pretty sure I posted that in the group. In fact, I know I did. I know I posted this one in the group. Posted it yesterday. Yeah, so that's where I got it. That's where I got it from. So yeah, that's what it look. That's really what it looks like. So you can see price making higher lows, and the CVD. This is on Exo charts. CVD making a much lower low. So that was your bullish CVD divergence. Okay, very nice indeed. What else do we have for the questions? When you look at CVD, do you look at wicks or candle closes? Well, you have to think CVD is taking its value from the whole candle, so it's taking the delta of the whole candle. So I suppose really you're looking at the wicks, because the way that it's calculated is from everything that's happened inside of that candle. It's not just, it doesn't go, you know, it's taking it from the start to the end of the candle. Okay, so it's working out the delta, you know, cumulative volume delta. It's taking a cumulative sort of, it's just adding up or subtracting the delta from that candle. So it's encompassing, the calculation is from the whole candle. Okay, so again, you don't really just want to see like one wick on its own and think, oh, here's CVD divergence. So on the 5 minute, we've seen one wick through, sort of thing. You want to see it a little bit more sustained to see that you are seeing absorption over the course of you know, you don't just want to see one candle and think, oh, this is CVD divergence sort of thing. You know, you do want to see a bit more of a build up than that to actually make a tradable divergence. But yeah, technically you're going to be, I suppose, looking for the wick. I wouldn't just say like, you know, if I just saw one wick down, I wouldn't be so strong. But if I saw the wick down and then like a few closes above while we were still seeing CVD head down, then obviously that's a good CVD divergence, because then we can see the absorption of market sells, price going sideways. So it's yeah, I guess technically from the wicks, because it is encompassing, the way it's calculated is from the whole candle. You know, it's taking the delta of the whole candle. For fib time, do you favor the 1.618? Is that the most important one, or are there other ones we should be watching out for? Please watch the Fibonacci time video. I have covered this. There's not like one. Well, the most important ones are 0.618, 1, and 1.618. Those for me are the three most important. 0.618, 1, 1.618. Kind of depends as well if you're trading off a pattern. Like if you're trading off of a harmonic, then you're going to be looking for the 1-to-1 to 1.618. So again, then the most important ones are 1 and 1.618. But 0.618 is also important. Those are my three main ones anyway. What is a no trade zone? E.g. below. This is too off topic. I don't like to go off topic on the questions, because I just I try and maintain focus on the topic that we're covering. This is not relevant for today's session. Danny, you posted on Twitter about preparing for the big short. Do you expect it to drop bigly? This is also a little bit off topic, I suppose, but nevertheless I'll cover it because it's kind of related. But yeah, it's kind of like what I've mentioned in the stream. I am expecting a pullback here, but at the moment there's no signs to believe. Okay, so there is no signs currently to believe that we are going to get this pullback. So until there is a sign, I'm not going to add into a big short position. There's just no need for me to take a big short right now while the trend is still up. So I'm laddering into a short, but for me to add size, I want to see a breakdown occur. Okay, so I want to see a loss of support, and that's when I'll add into a big short position. But until that happens, I'm going to go into a short, but it's not for me a big position. Okay. I want to see a loss, so I'm laddering into this, okay, but I would like to add size. I want to see support no longer act as support and see it act as resistance, sort of thing. Currently we're not seeing that in the charts. Which time frame are you looking at the gap on 4 hours? It's not closed. Yeah, so it's going to depend on the time frame you are looking at, because if you look at the 1 hour, it's also not closed. Okay, and again, which is the time frame that you want to be taking a look at? It's hard for me to actually say the exact time frame, because you can see here on the daily it's clearly closed, so the daily time frame is closed. If you come down to the 4 hour, because I would be looking at, if I was doing this myself, I would have my line there, which is 9125. So again, there's a little bit of, is this gap closed? Technically, it depends what time frame you're looking at. So clearly on the 4 hour, there's still, in my opinion, the way that I would trade a gap, I would say the gap is not closed. So, but then on the daily time frame, obviously it is closed. So again, there's a little bit of discrepancy there. Personally, I would say it's not closed, because I prefer it on the 4 hour time frame, but the reaction has came off of this daily time frame. I don't trade on the CME futures, so for me it's not a massive deal, but nevertheless, the higher term time frame, the daily here is filled. The 4 hour, in my opinion anyway, it's not filled. This is why we can still expect to push up to get it filled on the 4 hour. But there's a little bit of a discrepancy there, or who's right, who's wrong. I would say it's not filled, but the reaction came off the daily, so there you go. What else? Yep, so that was that question. Let's see what else we have. Did you get that 80 probability for value area high, value area low? If it enters into last day's value area high from your personal journal? No, this is actually taken from an official trading book that basically teaches the value area highs, value area lows. I forget the book offhand. I do forget the book. Yeah, I can just remember that's just like a statistic that stuck with me. So I guess this is focused on the stock market, so to speak, because this would have been a book that I probably read 5-6 years ago. But yeah, that's not from my personal statistics. 80% is just known as like the 80% rule. So if you do study like volume profile, then that's just like a well-known sort of statistic. So yeah, that's not one of my personal ones. That's just a one from a trading book. What are you explaining? Does it work on alts too, or only on high volume coins like ETH, BTC? So I would say, yeah, it works on everything. If you can pull this information, yeah, it should work on everything. There shouldn't be a reason why it doesn't work on low volume coins. I only trade high volume things, so I am not interested in trading random altcoins. So you're gonna have to do your own research on that, because I don't trade random alts. But it works on ETH, Litecoin, Ethereum, the major altcoins that I trade, like Link, Basic Attention Token. These random alts, yeah, it might not work. I don't know, because I don't trade it. So How do TPOs differ from volume profiles? TPOs are time price opportunity charts. So you're looking at where price goes during the day. Okay, so how price is basically moving in the day. So here we're on a daily chart, and what we can see here, okay, this is a TPO chart where, again, I can go into this on more depth, but basically what we can just see here is where prices interacted during the day. And again, you get like patterns on TPO charts, you get tradable statistics on TPO charts, but basically TPO chart is to do with time, whereas volume profile is to do with volume. So one is time, one is volume, and that's how you can get these nice confluences with time and volume coming together. But yeah, TPO charts are only to do with time, volume profiles are only to do with volume. What do I look up for an extra charts when entering a sculpt? This is too long for this stream. It's also off topic in my opinion, so I would just say I'm going to do a live stream dedicated to exo charts, and I'm also going to do more live streams dedicated to scalping, so that can be encapsulated in a different one. Are all three platforms giving the same values? Yes, all three platforms would give the same values. Exo charts, TradingView, and Sierra charts, they're all going to give the same values. What do the row sizes stand for in the volume indicators on TradingView? I see different settings give for different levels. For session use 148, but fixed range 170. It's basically how big they are. So you can see here, this, for instance, if I have it on 148, then there's 148 ticks in here, or little bars. If I have it on 170, there's going to be 170 bars. I like to have more bars really because it gives a little bit more accurate information. But that's what they are. Yep. So that's exactly what they are. And here we have another one. How do you draw the session volume, and how do you, so you don't, so let me finish it. So how do you draw session volume, and do you have to put one at the area of the charts for it to print itself? So you don't have to draw anything itself. This is all automatic. Okay, so this is all automatic. It's automatically going to draw all of this for you. Okay, so all you need to do is load up the indicator session volume, and it's going to draw all of this all for you. Okay. So this is why TradingView is quite nice. It's just all automatically going to put this in all for you. Okay, all of that's all automatic. And do you have to put at one area of chart for it to print itself to the most relevant area on the? No, so you don't do anything manually. All automatic this tool. Sometimes price seems too bound to to bounce a lot from a point of control, along with forming some kind of descending triangle, yet it holds. Is this showing how strong point of controls often actually are? So really difficult to see this question without seeing like a chart sort of thing of what you're referring to, because I can't think of like examples off the top of my head of seeing a descending triangle onto a point of control. Yeah, it often holds. I mean, the context is going to be so just massively important. So it's really hard for me to like give an answer to a descending triangle onto a point of control. All I would say is context. Context is like so important when you're trading any of this. Like, are you doing a descending triangle onto a point of control in an uptrend? Like, if we started getting a descending triangle into a point of control, like yesterday, for example, when we're expecting it to break out, then are you going to be short? Like, it's clearly a really big support if you're in an uptrend, even if you form a descending triangle onto it. You know, descending, this is why generally I say I don't like ascending descending triangles, because they generally are fake outs. But if the context is really bullish, it doesn't really matter what pattern's there. At the end of the day, you're trading with the context of where it's coming from. So I mean, is this showing how strong point of controls actually are? Like, yes, for me, point of controls are really strong levels. Okay, so you know, point of control is more important than a descending triangle. Well, I suppose like if you see a descending triangle into point of control and it's continuously breaking up, then it kind of answers itself that point of controls are really strong supports, and until broken, it's a really strong support. You know, if you're forming a descending triangle onto it, then you know, take the context of the trade. Are you in a bull market? Are you in a bear market? How are you entering that pattern sort of thing? Thought the naked point of control of exo charts was the level with more traded volume of the candle, not the day session. So basically, exo charts is going to take it for the session. So if I here I am on the daily, so this point of control is it's basically extending the point of control of the daily session. Okay, so you can see here, this was our daily session, this was the point of control, it's extending that point of control. This was the daily point of control of this session, it's not extended because it bounced into this day. Okay, So no, it's exactly the same. Like, it's exactly the same as on TradingView. It's just you get more history on this website, and if you change time frame, you are going to see the pointer controls of that session of the 8-hour chart, for example. This is our 8-hour naked pointer control. Funny enough, it lines up with daily pointer control. Okay, so that's an advantage somewhat of Exo charts. You get that feature that you don't have on TradingView. And I think that is all the questions that have been sent. Let me just do a check myself. Apparently there's another AG group thing. Some of the questions I'll take it. Some of them are really irrelevant, and I don't want to go over the irrelevant ones. But you know, what if I'm I always do my charts on BitMEX. BitMEX for me, even when I'm trading on Binance, I will trade off of the BitMEX charts, sort of thing. Like all my relevant levels. Whenever I give a level, it's always related to BitMEX. Even if I'm trading on Bybit, Binance, Debrit, you know, whatever I'm doing, my focus is always on the BitMEX chart because that's my primary exchange and that's where the most volume is transacted. I love BitMEX. I must admit, I love BitMEX over every other exchange. Yes, and I almost forgot about that. Yes, thank you for reminding me because I did nearly forget that. Yes, I just saw the comment there. We are doing a 0.1 to 1 Bitcoin trading challenge. Sorry, I nearly even forgot about this myself. But yeah, we're going to do a 0.1 to 1, no, 0.01 to 0.1 BTC, so Bitcoin trading challenge for you all, okay? So a few things to mention about this. You know, it is a small amount, so this basically means everybody can get involved, okay? We want to see people practicing and, you know, trying to raise, you know, gain their account sort of thing. A little bit of competition, I suppose, here. You know, winner will get £200 and the recognition of being a champion of the challenge. No more than ×5 leverage can be used on any trade, so don't go above ×5 leverage. We don't want to see you doing this in 1 day sort of thing because you've gone ×100 and got lucky on a trade. So ×5 leverage is the max, absolute max. You can stay on ×1 though if you want. And only Bitcoin trade, so no altcoins, just Bitcoin, and no above ×5 leverage. So why are we doing this? So the challenge is not about making money, but rather to test your trading level in real conditions, okay? So there is obviously a big difference between paper trading and charting, okay? You can be really good charting, you can be a really good technical analyst, and you can be really good at paper trading. But as soon as you put real money on the line, you might suddenly see yourself losing trade after trade after trade, and that's because of the emotional impact, psychological impact that comes across with trading, you know, with real money. So that's why we want to put an emphasis on trying to get people into, you know, looking to trade themselves, because, you know, there's a big difference between this. And, you know, you could have all the theory in the world, but if you don't have the emotional and psychological, you know, aspects in check, then you're going to fail ultimately. So it's important. There should be no pressure though for obtaining big gains for those involved in the challenge. It is all about learning, so we're not doing this to really, you know, the aspect of the focus of this is going to be all about like improving yourself and improving yourself as a trader. So a new channel is going to be created in Discord. Okay, so I am going to get a channel created on the side of Discord, and I'll show you exactly where this is, so it's very obvious. We're going to have a new channel that's created on the side here that will be called Results or Bitcoin Challenge, probably just Results, Bitcoin Challenge, one of those words, and it will be just added to the left hand side here, where basically, yeah, you can get involved in the challenge if you want to join, and from in there you can post your gains, you can post your losses, and you can post your account growth, so whether you're gaining or obviously losing. So we encourage you to post your wins, you post your gains, and, you know, inspirational, but most importantly is to identify problems within your trading, and maybe if you like lose some trades, then you can post in the psychology channel. If you make a mistake on a trade, you can explain the issues and get help from myself and Mike and some top members in the group that love to help. So, you know, it's a really, really good opportunity, I feel, for this. So it is, as I've mentioned here, it's like the closest thing that you're going to get to private tutoring without paying for it, sort of thing, in that regards. Because if you do run into a problem with a trade, you will get a solution of what went wrong. So if you are recognizing a mistake, then you're going to be able to fully recognize that. And then me, Mike, or someone else is going to give you a solution to your problem. So you should see yourself improving greatly. So this is really a challenge that we are putting to you all. It's honestly just primarily focused on educating and, trying to get you up to be a better trader. Don't think about, obviously, don't focus on the monetary side of things. Focus just on like using this as a kind of like a play along sort of challenge. It's nice to have a bit of competition in there, but at the end of the day, don't trade, don't trade silly sort of trades. Only take the trades that you would if you were trading with 1 million contracts sort of thing. So the only way that you can trade with 1 million contracts is if when you start small, that you think you're trading with 1 million. The psychological, and at the end of the day, no one wants to throw away money, do they? So this is kind of a challenge to assist you, and so you can recognize what's going wrong in your trades. Okay, so if you are good at paper trading, you might really suck at trading with real money, and then by doing this challenge, you're going to be able to identify what your problems are and then have a solution to that problem. And as I've mentioned, just read that spelling mistake. That will be probably ignored. If you have any problems, though, then you can come across to the psychology section, and here you can post about, oh, look at this guy. Post about your wins if you can grow an account like this, or post about losses if you're seeing a problem with losses. Okay. This is a challenge. That should be fun. So that's also what we're doing. I nearly forgot about that. Yeah. Ran out of water. If you fall back into value area, you expect it to fall down to the old value area high, or is that 80% down to the old purchase? So no, the rule is that if you're up and you break down into a previous value area high, then you expect it to auction down to the value area low. Same sort of thing, that if you are trading sideways, you move down, but then you get back in acceptance into value area low, then you expect that to trade up to value area high. You have the 80% chance. If you are range, drop from the range, get acceptance back into the low of that range, you expect it to trade up to the high of the range, 80%. So obviously, yes, you take profits at the point of control of the range, okay, or the middle of the range, you still take profits there, but ultimately you are expecting it to remain range bound, whether it's rotations from low to high. Same if you're going sideways, you break up, but you then get rejected and come back into that range, well, you can take profits at the point of control, but ultimately you're looking for the bottom of the range, aren't you, and expect it to rotate again in that range. Okay. There are videos. So the ones that I've done already, I done for myself. This was personal challenge that other people weren't really involved in, but I done a 2 to 20 Bitcoin challenge. That was complete when we had that 50% drop. And the videos are on the website of that. Literally, I made in one day 7 Bitcoin on BitMEX, 7 Bitcoin on Binance. So that was 14 Bitcoin in one day that I gained in that challenge. But I was already before that anyway. I was already on I think it was 17 Bitcoin, starting from 2 Bitcoin. I can't remember offhand now, but I got that account. So started on 2 Bitcoin, grew it in over the term of 6 months. I went from 2 Bitcoin up to, I think I was on about 15 Bitcoin, something like this. I grew it like an exponential amount anyway. And then, literally when we had that 50% drop from 7,000, well, basically 8K down to 3K, I was obviously all in Tether on Binance. So I went straight to 10 Bitcoin on that one or something. And then on BitMEX account, obviously was in $100,000 short. So that one as well made 7 Bitcoin in a day. So that challenge I was doing well anyway over the course of 6 months. It was from 2 Bitcoin. I can't remember now what I was on. It might have been 10 Bitcoin. I don't know. Go back and watch the video. But I think I was on about 10 Bitcoin. And then it went to 24 Bitcoin in the day. Yeah, I think that's what it was. I was on 10 Bitcoin and then it went to 24 Bitcoin. It was a crazy day. But yeah, that challenge I obviously completed, got rid of that one. Then I was doing a 0.1 to 1 Bitcoin, which I still have that account, but it's on 2.0.25 Bitcoin because I just kind of I just forgot about it. So that account is still going, which was a 0.1 to 1. But I'm going to just bin off that one. I still have that account and it's literally still there, but I haven't entered it in so long. So I'm just going to ignore it and do this one. This will be the focus. This is going to be the one that's going to be the main one now. Just like 2 to 20 Bitcoin was like a real big focus, this is going to be the focus now of 0.0 to 1 to 1 for everybody to get involved with. So yeah. And yeah, that is going to be it. I'm going to call it a night. I am absolutely my throat is in a lot of pain. If I've missed, I see there's a few questions I haven't taken. Let me just say, a lot of them, quite a few of them are off topic, and I'm not going to take the ones that are off topic. But I think I've done all the ones on the point of controls. Not sure if I missed this answer, but the candles in your value area high, value area low point of control theory had all the candle closes on the 15-minute chart. If I missed, please ignore, but the time frame is pretty MB for me. I'm not 100% sure of this question, but basically, yeah, the theory is not time frame related. Okay, so the theory is not time frame related. This I presume you're asking about the 80% rule. It's not time frame related sort of thing. So you're not saying it's not anything to do with time frames. It's just auctioning back into value area high. So if you have a value area high and you've broke out of it, if you auction back and you start trading inside that value area high, that's acceptance into that value area high. So if you're accepting back into that, you're expecting it to trade down to value area low, because at the end of the day, markets are moving sideways 80% of the time. So if it's moving sideways 80% of the time, if you break out but it comes back down into the range, we expect it then to just continue ranging, don't you? So the 80% rule is there, but obviously that's just taken from really, market theory, that if you auction and an auction gets rejected and it wants to come back down lower, well, then you're going to generally expect that to at least auction to fair value, which is your point of control, or, value area lows. So, that's why point of control is a really big take profit. But yeah, it's not important, the time frames on this. The time frame is kind of irrelevant. Okay, it's more you do have to try and get out of the mindset of like saying, I want to see a close on the 3-minute time frame, I want to see the close on the 5-minute time frame, I want to see the close on the 4-hour time frame. I'm trying to get people more out of that. Yes, it's a really basic way to approach things. You want to approach things looking at volume. Okay, volume is much more important than candle closes. So you do want to try and get out of that mindset. You want to get out of that mindset, really. Cheers, everybody. I hope that you have enjoyed this one. Went on for much longer. I think I'm going to have to think of something of a way to do the questions, and maybe a bit of a better way, because I have a feeling that I might need to start changing the way that I do the questions. I'm not sure. Because obviously, I'm being hounded by so many different questions. So yeah, I'll have a think about that anyway. But in the meantime, hope that you thoroughly enjoyed this one, and you now understand naked point of controls, session point of controls, and how I trade with them. So I'll catch you next week, where I think I'm going to have to do exo charts. So yeah, cheers everybody. Thank you and good night. Bye.